All right, so looks like everything is working. Sound should be good. And we can go to the main. Hi, everybody. Hope you're doing well. You know what time it is. Let's go over the technicals. Let's see what the market is showing us. Hello, Alex. Yo, yo. So, as you guys know, here with no biases, we will go over what the technical analysis is saying or showing. We're not gonna presume whether Trump is gonna come out with some new tweets in 5 minutes from here. All of this is redundant. We spoke geopolitics enough. Sound is good. I should have made fun and just kind of pretended to be quiet for a second and just kind of as if it's muted. You guys used to having technical issues by now. So as always, we're gonna go over the time frames, see what the market is saying about itself, not what we have gut feelings or think the market will be doing. So today, so far, not too much of an exciting day. As you guys can see, we opened up roughly around close, teetered around a establishing, growing as we are. We were basically generated this channel within the last couple of sessions. Right now, on the 1 minute, we are again sort of moving within the framework of the channel. Looks like we are at the high ranges, maybe even transitioning into this newer channel, or this could have been the channel we actually have been moving within the framework of for throughout the day, basically. So as you can tell, let's go 5 minutes. This is where things get more interesting. Our channel got wider. It has been holding on for longer, as you can see. Basically, that is roughly the same channel, give or take the same channel, actually. So we're right now on the high end of things, which actually, since we are out of the range on the channel that is a bullish channel, and we are right now sustaining this bearish channel, and what appears to be that we are now testing the bottom, the support range of the current upwards leaning channel trend, and so arguably we are very likely at this junction of things to see a little bit more of a transition, something more bearish like. Although this 30 minutes actually is more indicative of us moving back into this broader channel we were just looking at. If I can get it back in. So I want you to kind of look at this channel as it is set on the 5 minutes, right? That's how the channel currently looks like. We're basically residing right on top of it, and we're testing it and the junction between the two forces. And since the 30 minutes right now is more so bullish than bearish, although arguably the combination of bullish and bearish territory is more indicative of a mixture of forces, kind of the forces canceling each other out. So we're going to have something more akin to the sideways price action than the extent of what the 30 minutes can give us. But it still is objectively more bullish and moving above the 20 range, at least on our K, which is our quick moving average. So since our 45 minutes is also indicative of some bullish pressure, bullish momentum, we are right now, as you can see on the 45 minutes, are basically testing median, the center of the current upwards leaning channel. So this indicative of more so bullish rather than bearish price action, potentially retesting previous highs somewhere around the 7,738, maybe 40. 1 hour similarly, so actually again bullish in bearish territory. So thus we're kind of getting that mixture of forces, so we're not either leaning upwards nor downwards. It's more so sideways price action. Yeah, I had a feeling. On the other hand, when we transition to the 4 hours, this is where things become a little bit more interesting, since then we are looking at a broader behaving channel. And as we just saw in the recent session, basically we pushed up higher somewhat Arguably, unpredictably, some people argue this is a beginning of an uptrend. I would argue this is still a part of the sideways trend we've been working our way within the framework of. Even our channel slightly started leaning upwards right now because of it. As you can see, our channel is no longer flat, it's slightly leaning upwards. It's almost like if you put all the people on board of a ship all the way to the left side, this is being the left side, you'll see the ship leaning to the left side, no big surprise. Now, but this is where things get very interesting because this daily chart is about to be more indicative of what we should see in the following days rather than throughout the following session tomorrow, simply because what we were looking at in the smaller time frame was exactly that. Here we are looking at a crossover. We are seeing a transition from a bullish momentum to bearish momentum, unsurprisingly so. Post a rally of such, I'm not going to be surprised to see a major correction. In fact, I'm surprised this rally held up as long as it has. We have generated a gap, if I'm not mistaken, right here. Although I'm not 100% sure, but I'm pretty sure we do have a gap right here. We got to see it on the smaller time frames right here around 7,600. 7,632. Between these ranges we have a gap, a hole for the price action to fill in. On the weekly, we appear to be just similarly so how we saw the smaller time frames, more so bullish rather than bearish. In fact, since we are exactly at the 20 point, it is more so indicative of that mixture of forces. Since we're not really bullish nor bearish, we are again teetering on both ends. So really the pressure on both sides is kind of equal right now. So what we'll see is just a little bit of volatility. Now monthly is again where things get a little bit more interesting, more problematic to some of us more interesting. So if you understand, and if you don't, of course, you can look right above me. There is an overlay right here that I've made that does explain how the stochastic RSI functions, what it is to pay attention to, since we are right now above the 80 mark on our stochastic RSI with dominance of bearish pressure, bearish liquidities flowing into the system faster than bullish, than buying, basically. So the system right now is indicative that over the longer period we're seeing a lot more selling than we're actually seeing buying, although actively we're getting a higher price point. This is something that I actually teach in my one-on-one academy, where I explain why and how the shift of momentum can still result sometimes in a higher price point, although we are experiencing a transition from one side to the other, basically having a transition from more so bearish, from more bullish into a bearish momentum, and a part of the cycle, a trend, if you will, as well. Howdy, Casey. Good to see you, brother. And so what we're basically saying that within the following sense right now, and it is a discussion we had in the community with among some of my students, myself, we discussed about how it appears to be that the current administration, or Trump personally, is making an extra effort to delay and postpone any severe market crashes, delay them into the midterms, which will take at least 3 more months, if I'm not mistaken, somewhere around November, if I'm not mistaken. We should have the 5th, if I'm not mistaken, we should have the midterm elections. So that's the period of time where he's trying to drag things out too. And arguably, that means that we still may end up seeing more sideways price action within the following months before we do break. And arguably, seeing all that bullish momentum we saw in the smaller price ranges is quite indicative of that process and delay. Does that cancel nor change the broader scheme of things in my anticipation? The price, the price range and the price action reaching somewhere around the high 5,000 area, or if you will, low 6,000s, because there is a major range of support and resistance levels around the $6,000 range. So we are expecting to see some entanglement within these prices, as well as 6,666 being a strong psychological level, and also coincidentally being in line with the current median range of the current upwards leaning channel, which we supposed to be making our way downwards within the following months, as the current momentum is indicative of, even though if it will take a little while to transition into that, we still will probably see a major correction on that major green candlestick we just recently saw, it being on the absolute resistance of multiple channels, whether we're looking at the combination of the weekly and the monthly. We're basically seeing more so resistance at these ranges we're in right now at the 7,000. In fact, those who don't know, we ended up testing 7,777, which is a major psychological level, similarly to 6,666. Of course, it is a facet of technical analysis. Believe it or not, ladies and gents, those who are not familiar will watch this later. I know right now we'll probably have mostly our community members who are watching this and understand and aware and have in fact watched this price action play out. But in reality, this is a very regular occurrence, nothing all that substantial. In fact, I can tell you that the 7,384.45 price point is far more significant than any of these psychological levels. This is something I can tell you, that all the technical levels and derivatives are far more important, and they themselves are more of a motive rather than a side effect, which oftentimes are perceived incorrectly, for example, gaps and other forces. This is also why I highly recommend signing up to the Patreon and joining the community. The Patreon is right there. Yes, it's right there. And sound, dear Greg. Well, sound works. I'm assuming, Alex, that's what you were trying to say. Dear Alex, thank you. Sound equal good. What a legend. So in the Discord, of course, I share my charts, my thoughts. We share discussions about geopolitics, price ranges, price levels, resistance levels, support, channels, momentum, all of the above, and then some, because all of these forces are basically the combination of things that come together to bring about the knowledge, the know-how, the understanding of where the market is going to be headed within the following sessions. As you see, sometimes even I can underestimate what the market can do. Although, for example, the current price action in the current days, I've expected to see somewhat a correction and a retest of 7,533, since we have a set of gaps below these levels. Right now, instead, we ended up filling in these gaps and basically retesting some of those levels, but as well as pushing right through, simply because the momentum was so bullish. And in fact, we already are seeing some major tension building up in the system and being indicative of a correction within the following sessions. But more so, if we're looking over the broader range of time, we realize that nothing has happened to that expectation of the drop. In fact, some would argue that it's very much alive and kicking, and in fact is worse than it was, because right now we're basically misleading some of the people who are watching this 3-month time frame and are seeing this convergence of the forces and think in fact we're transitioning from bearish to bullish. But in reality, if you look at the values or look at the actual forces, we still have, with all that bullish momentum that just recently played out, all of it did not change the current build-up and structure for the longer duration breakdown. So, in other words, those who are attentive realize that basically the wolf is still hiding in the bush, or is still lurking and about to explode sometime soon. Since we're looking at the quarterly and we just entered the recent new quarter, and we have at least a month and the current month. So basically, roughly, as we can say, 2 months. I call it about 40 something days, since in a month you have about 20 to 22 days of trading. So you can argue that the next following 40 days we will still see some level of entanglement and support and resistance testing within the current framework. But those who know to pay attention to precious metals, for example, is I just had a very, very good session with my Academy members. We just covered precious metals, safe havens, and subsequently, of course, we discussed energy, oil in it, of course, and derivative related sector related assets that may explode as a side effect from the energy sector seeing more of a bullish run for the following sessions, simply because of the adverse behavior in the stock market and the energy sector. Now, by the way, those who are super attentive, of course, we spoke about Palantir, which was extremely important and played out and had a major role in the recent sessions. But unfortunately, to those who do not realize, these birds are short-lived and probably will not survive and will die down sometime soon. So unfortunately, I want to tell you, ladies and gentlemen, that this is something that if you did not anticipate and participate in, which by the way I spoke about and I have mentioned recently before in our previous deep dive on Palantir in our community, about how there could be a potential correction, but that appears to be all it's meant to be, simply because if you have a buildup of momentum throughout a longer price range through a longer period of time, what happens is that momentum ends up spilling over and becoming bullish. Even if the market is not yet transitioned and is sideways, it's permissive for the market to transition into more so bullish side of behavior, basically. So basically, we've seen a correction, not a full-on bullish run. This is something we have, of course, discussed because this entire run was highly dependent on the market being permissive. Likewise, we just recently discussed a potential run on Tesla, because if we're saying that the market will be permissive in the following sessions, that means it will still delay and postpone the process of a breakdown, and so thus you have room for individual assets such as Tesla to play out their bullish runs. In fact, for example, if we're looking currently at the weekly, we're going to realize that there is some level of buildup and transition from bearish to sometime soon bullish. Even if it's temporary, even if it's still a measure of correction and not a full-on bearish trend, still it appears to be that the market is preparing to some measure of corrective behavior. That's it. That's kind of what we discussed in the recent sessions. Nothing all that different from what we've discussed in the recent several months. All it is that we just seen an interesting burst to the upside and everybody got overexcited. Of course, the average Joe normally sees this sort of behavior and thinks that the market been going up, so it's gonna go up. The reality normally says that if the market sort of misbehaves this way and runs real rapid to the upside, it will end up correcting. Vice versa. In fact, if we're going downwards, we'll end up correcting if it's not justified, especially in this instance, since if you look at the broader scheme of things, we're moving more so sideways rather than upwards, even though we did experience a little bit of a burst in bullish momentum recently. So that's kind of it. There's not a lot to cover. I just thought that, since we're on a roll of doing lives recently, and I probably want to bring everybody up to speed. Unfortunately, I also had an Academy members meeting today planned out. Unfortunately, it's not going to happen. We'll see. Maybe we're going to have a short meeting tomorrow. Today, things are not adding up. And also, that's why one of the reasons why I thought it's tremendously important I go live and I bring you, ladies and gents, up to speed. At least keep you up to speed. Although, in reality, there's not much to emphasize. I mean, we kind of are looking at that transition from a bullish cycle into a bearish cycle, which will last quite a long period. Don't get me wrong, there will be bullish corrections within that framework. In fact, here it is. You can see already on the screen before it even happened, before we even dropped yet. So people will remember, say, Greg, you didn't know. No, yes, I did. In fact, I will know ahead of everyone else, simply because technical analysis works this way, that we can actually assess not just levels, but the overall broader rhythm of the market. And from that, we can understand, how the market will behave in the following long-term and short-term duration. Of course, we're not trying to time the market. That is a very unrewarding exercise. Technical analysis is not about timing the market, but rather understanding where the market is about to move in the broader scheme of things. In the following, of course, if you are a trader, there are ways you can read the market down to the more granular level and actually yield a significant amount of day trades out of this. Using these very same tools, but even those still have a necessity of you understanding and knowing the broader cycle and seeing how these smaller waves are a part of the broader cycle, because they are literally functioning this mathematical way. It's all mathematical. Those who know. Those who think it's all gut feeling and guessing cannot be further from the truth. It is simply all about mathematics, which translates into geometry, which translates into charting. And that is all. That is it. I don't have a lot to add. I know it's not too much of an exciting call today. But still, as I said, I think it's imperative I bring you guys, ladies and gents, up to speed, especially during these boring times, during these sort of, sideways sessions, simply because then this is the times when people get to tend to get, fall into this lull of boredom from the market, not pay attention every day, and not realize how things are changing on the go. And if you pay attention and follow on a daily basis, you understand how we end up transitioning from what appears to be a bullish trend into a bearish trend, and subsequently resulting in a broader downtrend. That's it. Like I said, ladies and gents, promise this is the last time I say that's it. I'll see you on the next one. I'll see you in the community. Sign up, join in. Definitely there are several spots in the Technical Analysis University where I teach one-on-one. Join in so you will be an independent analyst for yourself and not a headless chicken like the rest of the people in